All right, let's take a look at some of the market moves that we're seeing under the hood. It's a fairly broad-based washout day, but there are some outliers. Let's bring in Bloomberg's Stephanie Hughes for a look at some of them. Stephanie.
Hey, Amber. So I'm looking at shares of Kelt Exploration. They're up as much as 7% today, which brought the stock price to its highest level since December and put the company firmly on top of the TSX best performer list. And it seems like investors are reacting to BMO Capital Markets energy analyst Jeremy McCrae, who is a regular on this program. He reinstated coverage of the company with an outperform rating and a price target of $8.50. So that's higher than where shares are currently trading at around $6.60. In his note, he says it's time. The company has set the stage for top quartile growth, and he said he was also encouraged by the significant land acreage in the Montney and Charlie Lake locations and the lessons that the company likely learned from these developments. He said they can take these lessons and apply them towards a more aggressive development plan. So he argues that he says investors who are growing more comfortable with inventory levels should be rewarded with higher multiple premiums, and just as this growth comes to fruition. So other energy names that are rising in tandem include Tourmaline and Athabasca Oil, which you and I talked about, Amber, so other high flyers on the TSX. The same could not be said about Allied Properties. Those shares fell as much as nearly 5% today, with the shares tilting downward as we were approaching the Bank of Canada interest rate announcement earlier today. As we know, the central bank did hold rates at 5%, which was widely expected, but it was the tone from Governor Tiff Macklem that while he sees that we're closer to rate cuts, he still needed more evidence that inflation was going to slow down further and that it would be more sustained. What does this have to do with Allied? Well, that is a real estate investment trust, which tend to be a bit more sensitive to higher rate environments. So when rates are high, REITs tend to underperform other sectors there. So some economists at CIBC got the impression that we're probably anticipating a higher for longer, or at least rate cuts aren't coming anytime soon. That was some other commentary from other economists suggesting the same thing. That wasn't the only REIT. There was also Northwest Healthcare Properties, a similar name that was among the worst performers today at certain points of the day. So lots going on today, Amber.
Absolutely. Thanks so much. That's Stephanie Hughes joining us from Bloomberg on some of the moves that we're seeing in Canada.